Hello, everyone. Dr. Eames here. This time I'd like to talk about the social enterprise spectrum. This is really a continuum of behavior um, that we see on the part of not only just nonprofits, but also on the side of uh, for profit business as well. Now, this is a really good graphic and gives us a lot of information, so I thought I would work through it for you, with you. Here we have a column of purely philanthropic thinking and activity. In the middle, a hybrid, and over here, purely commercial. And so what we've got is a section on the general methods, motives, goals, and so forth of each of these three different types of behavior in the continuum of options that we have in this sector. We're still talking the nonprofit sector. And then we're looking at some real key stakeholders here, four of them. What are their options and how do they act in these different areas? So let's just take a look at what we've got here. If we look at purely philanthropic organizations, nonprofits, well, they are appealing to the goodwill. They are driven by their mission. And what their ultimate goal is social value of some type that they're going to create. They have a cause, an idea, something they're really trying to do. If we look at the purely commercial side, which is over on this end, then we see that the organization itself is the appeal is not to goodwill, but it's to self-interest. And that makes sense. If it's purely commercial, then the motive really is profit. So over here, where our, no, our motives are very much driven by our idea, our cause, and so forth, it's mission driven. Over here, it makes sense. In the private sector, we already know that it's market driven. Over here, our ultimate goal is that creating of social value. Where over here, our ultimate goal is the creation of some economic value. Okay, so we know these two extremes. What we see today and where all the controversy lies about this social enterprise spectrum is that the hybrid, when it comes to what is the appeal, well, there is a mixed motive. It's not purely nonprofit any longer or charitable, and it's not purely commercial either. So it does have an appeal that cuts across both sectors. Uh, but when we're talking about a taxable entity or a non-taxable entity, it begins to cause a little bit of controversy here. So where when we look at mission, market driven on the commercial side, mission driven over here, but the hybrid organization has a balance of mission and market. And in fact, by this definition, we would have to say that many of the 501c3s that we consider charitable run organizations are balancing their mission with some revenue ventures they have to do that are driven by the market. So thus, they have a hybrid sort of function as an organization. They're not purely nonprofit any longer if they are doing the things of business. And if you'll recall, I started out talking in the course that certainly managers have to do things of business if you want to survive as a nonprofit. Well, we see it here. You are driven to it because you need to survive. There is too much of the double bottom line and plus the reverse cash flow that causes you to turn to somewhat to the market and balancing those concerns. Now over here, the hybrid is looking at what is the real goal, economic or social? Well, here the goal is both. It is both. So what we've got is a new sort of entity, we could say, on our hands that we really haven't seen in the past. In the past, a charitable organization was clearly defined and understandable, and a market-driven for-profit organized for profit was purely understandable. Now we have this curious mixture. And it's because businesses actually are starting to act more like nonprofits, and nonprofits certainly have been acting more like businesses for quite some time. So let's look at it in terms of stakeholders, the beneficiaries. In other words, who are getting something from each side? Well, if you're getting something from the commercial market, you're going to pay the going rate of supply and demand. Over here, the beneficiary quite often pays nothing. And this is where that reverse cash flow comes in that is so daunting for the nonprofit market. And what do we have in the middle in the hybrid? Well, maybe you'll get a reduced rate. or certain members would get a certain type of rate, and there might be those, depending on circumstances, pay nothing. So it is a true hybrid. Over here, where does the money come from? Well, if you're in a commercial venture, then you're going to pay interest on a loan. You're going to get money from someone who gives you capital. But over here, generally, a gift or a grant is an outright giving of money with generally conditions attached. But what do we have in the middle where both sides are acting more like the other? We're getting from providers of capital, well, we're still paying for it. It's not an outright gift, but we're getting it below the rate that they would pay over here if it was purely commercial. So we're giving them a break. And so this is truly a hybrid, a mix of below market capital with probably special interest rates and all of that. And maybe also a small gift here and there of different types. What's the workforce here? Well, if it's purely philanthropic, then everybody's working for free. Over here, the hybrid says, well, we're going to have volunteers, but we can't run this enterprise without some paid staff and an executive director of some type. And these people traditionally have been willing to accept slightly below the wages they could make over here in this sector, where they do get market rate compensation set by supply and demand again. And then suppliers. Well, suppliers in this environment of purely philanthropic, of charity, are going to make gifts. And over here, what we're going to see is a hybrid mix of special discounts rather than outright gifts. Maybe some gifts in return. In-kind gifts means, oh, we do something for you, you do something for me. So there could be all sorts of arrangements here. And then over here, of course, suppliers are going to be charged, and they are going to charge a full market price. So that's how it would work. Now let's come down here to look at these real changes, and this is what is a major trend in the nonprofit sector today. We have the increasing use of business methods by the nonprofits. They simply don't have the grants coming from the government like was coming 20 years ago. There aren't as many private foundations out there to give the difference and make it up that what the government's not giving anymore. And so many nonprofits are now forced to earn revenues, and they may not be related to their mission. And then we've got the growing responsiveness of business to social concerns. Part of this is driven by the attitudes of consumers who generally today feel that many corporations, if you're going to get wealth in our neighborhood, so to speak, then you need to give back. So it has given rise to this notion that maybe we should create a new legal category of companies of something. Maybe a limited liability company that has certain thresholds, only has to make a small amount of profit to qualify for maybe some specialized tax breaks. But the idea is maybe we need to address this notion of a hybrid activity by creating a new legal category. After all, the IRS created a category of nonprofits with its forms and so forth and regulations. There's no reason a similar thing couldn't be done to accommodate these new hybrid models, whether they're coming from the nonprofit sector or from the private sector. So there certainly is controversy over the commercialization of the nonprofit market. We see an increasing alarm over time, in particular also from the IRS, that nonprofits are spending way too much time engaging in what we see here in unrelated business activities. In other words, things that are not directly related to the mission that you're espousing, but you're doing them in order to survive. But are you doing more business activities than you are your mission? At a certain point, then you'd have to say, well, maybe you're a commercial enterprise that's doing some nonprofit activity, and you're no longer a nonprofit doing some business. So there are different things out there. And there are lots of myths and so forth in the nonprofit sector, these common misunderstandings. The biggest one is about you can't earn any money. Well, you certainly can, but the revenue has to be related to your mission if you want it to remain tax exempt. Otherwise, it's called unrelated business income tax, UBIT, and that is just kept track of in a separate category. And at the end of the year, the nonprofit will pay taxes on that sort of revenue. Okay, folks, that's all I want to talk about this time. I'll talk to you again soon.